Ladies and gentlemen, welcome back again. This is the TD Markets podcast, and this is episode 5.
Season 3. Good to be with you again, my brother.
Good to be back, man. I go by the name of Tsepo.
Ashley Reeve here.
Yes, sir.
It's good to be with you guys. As we said, season 3, episode 5. We're making progress, brother.
Making progress. We're getting that momentum now. And that's very important. Don't forget to subscribe, like, and share. You know how these YouTubers do it.
Yes.
It's a plug for us, so we need to also do it as well.
Share our online content. Make sure we reach you guys.
Yeah.
Because not everybody can come to the office, and we're well aware of that. So we want to make use of all of the platforms we can to obviously reach you. All right?
All right, 100%. My man, the previous episodes we had, there's been some positive response.
Okay.
The last one we shot was, giving the guys feedback on our tour, the first leg, the second leg of our tour.
Yes.
Remember, we are going to have more guests coming. The first guest that we had so far was Terrence.
Yeah.
Not Terrence.
Lawrence.
Lawrence.
I hope he doesn't watch this, bro. But you call
Lawrence.
Terrence.
No, it's Lawrence. It
Lawrence,
was a crypto episode.
Lawrence, we're sorry.
Yeah, we're sorry, my man. Sorry, it's Lawrence.
But yeah, it was great.
Great.
Feedback for bots for Namibi was great.
Yeah.
Weather.
The weather.
Yeah, on both those occasions. I think we're experiencing them here now.
Right now, as we're recording this episode right now, it's hot outside. And this week, there was a bit of rain.
There was a bit of rain.
Was it yesterday? 2 days back?
Yeah, 2 days back. I believe yesterday it rained a little bit as well. But I do know in the week there was a day, I think it was maybe Thursday.
Yeah, you had a trading room.
It was Tuesday.
Raining on a trading.
It was Tuesday.
Tuesday.
The 7th of November.
7th
Listen,
of November.
it was crazy. Just out of nowhere, the rain came. It was cold.
Yeah.
We had our coats on. And I mean, right now it's hot. So
it's hot right now.
Second last month of the year.
Yeah.
And the weather's strange. Very strange.
Usually during this time of the year, it gets extremely hot.
Yeah.
Of course, we are heading to December. So,
exactly.
But hey, look, we're not complaining of the rain.
Yes, please, guys, don't
complaining of the rain.
We don't complain about weather. There's lots of things to complain about out there.
Lots of things.
But we are happy. We are very happy to be with you guys. We're not here for a weather report, though.
100%. But man, look, let's get right into this episode 5. There's a few things we're going to talk about since this is a TD Markets podcast. So we're going to talk about the financial markets and all of and other things in between. We're going to have other guests. Now, what I want us to talk about here is something that is critical, especially in someone's trading career, at the beginning of someone's trading career, which is confidence. Some people when they trade, especially at the starting phase, they lack confidence, and that is because of a few things that they are not doing that are missing. They might be missing some information. I want us to talk about confidence in trading and why a trader can lack confidence at times, which it is a barrier for them to make money in the space.
Okay.
I will obviously give my input, what I think, but from your perspective, why do you think that I would lack confidence, or you would lack confidence, or the next person lack confidence?
Fantastic question. Fantastic topic, firstly. Confidence is a very, very strange thing because it's anchored in something else that's a bit deeper than the actual word itself, right?
Yeah.
So a person that becomes a trader, their confidence level when they start out has been an accumulation. This is just me, an accumulation of what's happened before in their life before they came to be a trader. So it's a little bit deep there for me.
Okay.
So confidence is as a result of what has not taken place in someone's life. And so the expression of the lack of confidence is then expressed on the charts. So if you look at confidence, the root meaning of confidence is actually Latin, and it means to trust or to have faith in.
There we go.
So that is a deep one. And so if you've not had and I think I'm going to generalize on this one. Maybe the guys in the comments can tell us.
Go for it.
But if you've not had something in your life that you had faith in, that you had trust, maybe your family, there wasn't trust. Maybe you had relationships where there was no trust. It left a vacuum of no confidence. And so that individual comes onto the markets, wants to make money, but doesn't realize even the markets need you to have faith in the patterns, faith in the data, faith in the technicals, Hey, I feel like I'm
my man is going in.
I'm going deep in here, right?
No, man, no, man. I'm glad that you take it from that angle of first generalizing it, because you mentioned two things there, which is trust and faith.
To have faith in. Yes.
Right. 100%. So now you are taking from an angle of life in general, right? And then you're using what happened before, which is the past data, the programs you have in your mind and all of that, So now, sorry to cut you in.
No, it's cool. It's cool. It's cool. So to have the lack of faith in, to not trust, from the root meaning of confidence means you have no confidence in what you're doing on the charts now. So even if we're teaching you the greatest approach, breaking down the charts in the academy, if you don't have trust or have faith in what you're doing, forget it.
The moment you say but, those things just goes out of the window.
Exactly.
You're analyzing, then you say, okay, I can see the setup, I can see this is something that I know, but it just goes out the window.
It goes out the window. So that trust factor, that faith in what you've done from a setup perspective, from a knowledge perspective, if that's not there, that's exactly what you said. The moment the but comes in, but I'm not sure. But the market can move against me. But the market is unpredictable. The moment, then it's tickets.
and as much as we're laughing, but this is something that people go through, especially beginner traders.
I'm even taking off my specs here now. Because you're so right. This thing is so deep. People don't actually realize that.
They don't realize that.
Can I also say something on this?
Sure.
Confidence also, if you have confidence, you have trust in it, it also means you know how to identify value in a moment. Because if you know there's a value in a moment, you come forth with this trust in that moment, that you have faith in the moment that it's going to produce a result, whether that is in a relationship, once again, whether it's in your family, maybe you have a reunion and you have to say something that is for the entire family, say a speech as an example. Your confidence comes from trusting that the family can get all the nonsense behind them and work together. So now you develop faith in that belief. So you step up in confidence and you give your speech. And people will believe in what you have to say because there's confidence that's backing that up. You see that?
100%.
So exactly the same with the trading, the data behind, just like you said, past data, we said technicals, we said fundamentals. Now you step into your setup. No trust, no faith, forget it. So there must be value. There must be value there.
There must be value. I'm glad you took it from that angle. So now, here I am, let's say for an example, I'm someone who lacks confidence in my trading, right? Of course, you mentioned things from the past. At that point in time, it's a make or break, kind of like a make or break for a trader, because now they're having thoughts of, should I continue? Should I give up? And all of that, right? So at that point in time, right, what can someone do? Obviously, we're looking at it from both angles, from life, general, and also the charts. Right. What can one do basically for them to have that confidence? Because it's very key when it comes to what we do.
Well, look, I have a few things that I've jotted down mentally. I actually have a few things that I've put down just for us to mention how to build that specific confidence, because it's like you're saying, you reach that point now, but you don't have it. But how do you get it? Especially from the premise of the markets now. So I've got like probably 12, 13 things that I've written down, that I think can help. But before I share that with you, brother, I am also dying to hear your side. Exactly the same question that you posed to me. I'm dying to hear your view as well.
So like what you said about life, 100%, I fully agree. You know, the lack of confidence we have stems from something that happened in the past. 100%, right? And then of course, as you walk through life, I'm not an expert of life, but as you walk through life, you come through, you meet different things, different environments and all of that. But when it comes to trading, right, same thing applies. The lack of confidence comes from either you've been losing trades before, you are trying to build the strategy, it's not coming together and so forth. So you're having these sleepless nights. It's like a ceiling, you've hit the ceiling, all right? 100%, I fully agree. So now, how I view it is lack of confidence comes from that, and also now from the data in terms of the strategy. Let's talk about a strategy for as an example. If you know a particular strategy and then you know the statistics of the strategy, you know that maybe it has a 60% success rate, 70%. Automatically, because you're seeing the numbers, confidence can come from that.
Got you.
You know,
fully agree.
100%. So when you take a trade, because you know the statistics and the data behind the strategy, just going to execute with ease. Even if you might lose 5 trades in a row, but you know over time, you're still going to make profits.
Yes. Okay, got you.
It comes from the data, right? What you said from the past, basically.
Okay. So we're running parallel with our thoughts. On the one side, we are dealing with life, how psychologically it can affect you.
Yeah.
And on the other side, how the wrong data can also affect
100%,
you. Got
100%,
you. Got you. All right. Well, look, that's actually amazing to me. Because to build now from that premise that you had mentioned, you don't have the confidence. One, I would agree with you 100%. What I would do is get competent with the data of your strategy. Understand that with this strategy, it works only for Forex. Or this strategy only works with indices.
Very important,
And then go more in detail and say, listen, which time frames would it primarily work with? Is it a scalping strategy? Is it a minor level swinging strategy? Or are we trading this guy long term, where we're just leaving this guy to run 6 months and up?
So sorry to cut you there. I'm glad you brought that up, building it, right? You mentioned a few critical points there, knowing where it works, knowing the time frames, the market conditions, and all of that. So let's build it up to a point where, just to give an example, right, to a viewer struggling with this, to a point where we know our setups, right? So let's say, for example, it works on, let's mention gold as an example, because gold now is the talk of the town.
Hey, we like our gold.
Pushed up, aggressively. So now let's take gold and say, okay, this strategy, we're going to apply it on gold. Done. Time frame. Which time frame would you pick?
So
as an example.
So this is a very, very interesting one, because for all the guys that are watching, when you pick an asset like gold now you must understand the dynamics of the asset. The specifications, the kind of liquidity, what affects gold as an asset, because you can trade gold long term, you can trade gold medium term, and you can trade it short term.
Sure.
Because there's enough buyers and sellers that participate in the value, in the performance of gold, which means it obviously creates nice trends, nice patterns, nice setups for us to trade in those various terms. You see that? So building up with a time frame. Remember, in the MetaTrader world, there's essentially 21 time frames that you can customize. If you're dabbling between the MT4 and the MT5. On the MT4, there's 9 time frames there, but on the MT4 is 9 time frames.
MT5, there's a lot more.
Exactly, and you can put them on the screen, 21 time frames, right? Now you can divide those time frames into terms. So as an example, on the MT4, the monthly and the weekly frames will primarily go for your major movements, your long-term approach. So you can use the detail of a 4-hour or a daily, to get a little bit more detail, to connect the peaks and the highs. Well, the highs is a peak, but the lower peaks, the higher peaks, and so forth. But you'll essentially wait for the signal on the higher time frame because of the amount of money that is traded in those candles.
I see.
You see that. So gold, as an example, you can use a monthly and a weekly on the MT4 as an example. When you get to the MT5, now it's very interesting, because now you have the monthly, the weekly, the daily, the 12-hour, and the 8-hour.
8 hours there.
Well, it's there. So now you have 5 time frames that make up the major levels, and you can dabble in between those to get the detail. You don't have to go all the way to a 6-hour, because there's also a 6-hour there. There's a 2-hour, there's a 3-hour there. So you don't have to go to all of those. You can just use the 8, the 12, the day, the week, and the month.
Nice.
And that becomes your major levels for gold if you're trading it long term. You see that? So do you see how I'm building it categorically now for each trader? Because not everybody has the same schedule, because that must also be determined as you're building your strategy. You can't scalp if you have no time during the day. If you're a miner, as an example, to all the guys, if you're a miner and you go underground at 6 a.m. as an example, and you come up at 7 p.m. or 8 p.m. It's just an example. You're not going to be able to scalp the market.
Not going to be able to scalp because you have, I mean, you get out of what time again?
8 p.m. Yeah.
Chances are it will take you 30 minutes to get home.
Exactly.
You have to with your family eat. So you might have a chance to look at the charts at maybe 11. And at that time you are tired.
Exactly.
You just had a heavy meal, you're tired. So someone like that cannot adapt or cannot want to trade a short-term or a scalping style.
Exactly.
They have to rely more on long-term.
On more long-term? Actually, medium to long term.
Medium to long term.
Medium to long term, because they can still get a 6 hour in there, 6 hour time frame. They can utilize 6 hour, 4 hour as an example, and they can go for maybe a couple of days, 2-3 weeks, and leave it to run. So just to answer you directly, building your strategy, the type of time frames on gold now, because we use gold. You can use the major, which I mentioned to you, which is the higher time frames. Medium, you can use the 4 hour daily if we're dealing with the MT4. And if we're dealing with scalping gold now, especially on the high impact news that we always look for when we're doing NFP, when we're doing CPI, 1 hour down. And for us, it's very popular, 15-minute, 5-minute. We utilize that for the guys because it's easier to understand that way for our guys. Now, so there's guys that trade on a 1 minute. But that's just going to be for a different breed, because a one minute time frame to enter on 1 minute and 5 minutes, you must have thick skin for that.
Yeah, you must understand the skill also. Must understand the skill of trading.
Did I?
Sure.
Did I give you an answer? Okay.
Yeah, so we build a building, right? So I think with time frames, it can be like it's a little bit flexible, right?
It's yes.
As you know, we don't focus on just one time frame.
Exactly.
Right? We try and do multi-time frame analysis to get different views of the market.
Agreed.
All right. So here's a strategy now, right? So we're trying to get to the confidence part.
Yes.
So you build a strategy now, right?
With data about gold.
Yeah.
Remember, it's liquid on all time frames, actually. Yes. Okay, 100%. Got you.
So now, a beginner mistake is to take the strategy, immediately fund an account, and trade.
Yes.
Why do I say it's a beginner mistake? Because they know the strategy. I mean, someone can teach you a strategy in 5 minutes. You know it.
Yes.
Because a strategy is the systematic plan or a set of rules.
Yes.
That will guide you on when to buy, when to sell, what is the direction of. So that's basically a set of rules. You can teach that for 5 minutes to someone.
Yeah.
They get it. A beginner mistake is to go to the charts and trade on a live account without the statistic behind. So that's where now confidence is. So if you know the statistic behind the strategy, you're going to have the confidence to say, if I take 5 trades in a row or 10 trades in a row, even if I lose 4 of them consecutively, I know over time, over those 10 trades, I'm still going to make more profits.
More profits,
right, than losses.
Yes.
That's a beginner mistake. They go there, right? So that is where the gap is now. That is where the gap is. So we need to now start doing things properly. And that, that 90% statistic of 90% traders are losing is essentially the beginner traders that are giving up.
It's beginners that are giving up.
Adding to that.
I agree. I agree with you.
That. I had a session earlier on and I told the guys that, the mistake that also beginner traders do is that they want to do what pro traders are doing right now.
Yes.
They don't want to do what pro traders were doing before they became pro traders.
That's a very wise point. It's a very, very wise point. Very wise point.
So we have this strategy now, right? How do we then get the data for us to be confident?
So now, so I'm gonna punt this one there now and say, get yourself into the academy. Get yourself into the academy, because now that we understand we want to trade gold and someone gives you a strategy, you need to understand, but this strategy, there's something behind the movement of gold. Let me go and analyze, how does this asset move throughout the day, throughout the week, throughout the month, throughout the quarter, throughout 6 months, throughout per annum? Because investors, they look at the performance of assets around those times. Right. That's why it's presented to us in the economic calendar, month on month, year on year, quarter on quarter. So that's the way investors look at it.
Nice.
So if we look at it outside of how they look at it, we miss the money.
We're missing it.
We missed. So we have to look at it in alignment with how investors look at it.
Nice.
And so if we look at the weekly movement, there are tips, techniques, skills, little things that happen during the week that these investors do where they stop the money flow, where they open up the hose for that money to. So those points, now you have to go and study the chart technically.
I get you. Yeah.
Does it?
Yeah. That's how you get data, from studying the charts.
Exactly, because now you are building confidence. So the confidence is being built now by how you are analyzing the movement, the performance of that asset there.
Right. That's very key in that. So as you, let's say, monitoring, looking at the performance of gold during a certain period of times, it's important that you try and now, first of all, understanding the overall movement on gold, how gold tends to move and all of that, and trying to apply the strategy and see if it is aligned with how gold moves and see if it will give the direction according to the rules of the strategy.
Yes.
If it happens that it does not align with gold, then that means the strategy is not built to trade gold.
And that's where guys keep on forcing an issue.
They're forcing it.
They're forcing the issue. They're like, no, if I can just change this thing on. No, the strategy is not for that asset.
Yeah, so, even though, just to be fair, even though we can tweak the modify the strategy, but over time, if it doesn't work for a particular asset or financial instrument, then it is not for that.
No, that's the point that I'm actually alluding to.
Yeah.
That if you keep on using it over time and you still forcing it for a long period of time, saying, listen, let me continue tweaking. So now you're tweaking for 5 years. For five years has gone by and you're still sitting there. Now, Tsepo and Ash want to teach you something new. You're so overwhelmed with information. You're not a blank canvas. So now you attend the class. You only want to attend one class and think you're going to get it. It's because you're still filled in your mind for 5 years with one strategy that has shown you it's not working.
And that's reality. What you just mentioned, it happens.
That happens.
So we need to unlearn to learn.
Oh, yes. We need to unlearn. And that is a very dangerous one for human being.
Yeah.
Because we don't want to be told, man, psychologically that we were wrong.
Is it because of ego, pride, what?
You know what, T? I think it's deeper than the ego, deeper, right? I think the ego is also a result of experiences that has built you up. Like if you have a 1-year-old boy, as an example of mine now, and I keep, telling him, you're the champion, but I never tell him that, listen, there's going to be times when you're not going to, win all the, you're going to have to deal with some losses. If I keep saying you're a champ, you win all the time, the day he experiences a loss, it's going to bruise him.
It's going to bruise his ego.
So imagine a child, you tell them for 15 years, right, that they are only champions. And then when they experience a loss, they relapse and they go into depression. The same with the trader. For 5 years, you've been telling yourself, this is a working strategy. This is a working, and then you keep getting losses, but you're not realizing, but I'm blind here, man. This thing is not working. Then Tsepo comes and Tsepo says, hey, Ash, listen, your strategy doesn't work for gold. How long have you been trading? No, 5 years. No, when are you going to wake up, my friend? No, Tsepo, he doesn't know what he's doing because, but you've been in this thing. You are a profitable trader. So I can't even see your value and what you're trying to impart to me because my mind is still filled with what I chose to put there. So this is deep, man.
I think that one is a topic for another day. It needs, because it might boil down to a person.
Yeah.
A person themselves, they might just stop the charts, stop looking at the charts and look at them now.
And look at themselves, yes.
Look at themselves.
So listen, you brought in a very deep one today. Hey, guys, all the guys that are joining us, he brought in a very deep one today. Confidence, because remember, money is psychological. It is psychological. The market is psychological. So people they pay a lot of attention to what is not psychological, instead only rational, the numbers, which is important. The data is important. But who created the market? It was man. It's our minds that created it, and our minds are a percentage of emotion. So if we are a percentage of emotion, how we think, we're not only rational, we're emotional as well, all human beings. So the market was created from rationality. It was created from emotions. There's value also in there. So we can't come into the market and just detach and say, No, but we're just going to think rationally about it. NFP is very emotional.
It is.
It's very emotional. The moment that spike hits up, I've heard you say plenty of times, wait, guys. When that spike goes up, wait, don't panic. Let's wait for the rejection. Let's wait for the retracement. Let's wait for the retest. That is a moment of high emotion. I mean, in bots. Remember the one lady that was saying to us, I'm very fearful right now. And you even comforted her and said, no, don't worry. We have this. There's a way we're gonna approach it. But just for the mere fact that she said in front of everyone, I'm fearful, shows you.
Yeah, man. You know, I mean, we've once upon a time we were there.
Yes.
Once upon a time, but you had to find a way to deal with it, to learn from it. And it's a battle that you in each and every day you trade.
Yeah.
You in a battle with your mind. You know, then there's the psychological part of trading.
Yeah.
All right. But let's not go too deep.
Yeah. Let's we just touch on and then we touch and go. Yeah. All right.
All right. So
got you.
So talking about getting the data now from the strategy.
Yes.
All right. We built the strategy. At that point in time, we are confident that we do have a strategy.
Yes.
Now we need the data to see if the strategy will work for us, because you know, like beginner traders think and believe that you need to have a lot of strategies to make a living out of trading. You just need one thing.
Yeah.
It's profitable over time.
Yes.
And then you can make a living from that.
Yes.
So now I want us to talk about the process to get the strategy. You mentioned now looking at gold as an example, understanding how it moves over time. You mentioned time periods for 6 months, maybe a quarter, maybe the whole year, you know, looking at gold. Now, that is where now backtesting comes in.
Got you.
Backtesting is something that, again, beginner traders think you're wasting time when you backtest. Backtesting actually gives you the data of that strategy for you to have confidence when you forward testing or trading it live. That backtesting, right?
Yeah.
You know, I backtest all the time. I still backtest till this day.
Yes.
Right. And the reason I backtest is backtest can give you, you know, 5 years of experience within a month. Maybe.
Yes.
If you backtest for the whole month, you're busy backtesting, you're getting data from 10 years back. Now, not only do you get the data of the strategy, but it also, you get a sense of how the market moves, how it has been moving. Because we know most these things repeat themselves, patterns repeat themselves, market structure repeat themselves. You get an overall understanding of generally how the market moves, the highs it creates, the lows it creates, the patterns it creates. And then now you then, you know, test the strategy out of that to see how it works. So backtesting is very key, is very important in a beginner's trading career. You know, we always say that experience is key in everything that you do in life.
Yeah.
You know, but with trading, that's how you can get experience in a short space of time.
Yes.
Yeah.
Can I mention something on backtesting as well? So also backtesting, it's you obviously engaging with the charts yourself, looking at the history, like you said, what has it done 5 years back at that specific swing low? Did it push up every single time? And you look for examples that's been duplicated over time.
Sure.
Another element is a supportive environment whereby you will lean on experienced guys and asking them. So it's a personal where you have a mentor, someone that you can actually ask. Like for example, with the academy, the academy, you have us here. You can schedule one-on-ones with us, and you can ask us about certain things that happen in a strategy that you may be backtesting. That's the one part, right?
Yeah.
Then there's other parts, other traders around the world where you can Google, for example, if you backtesting gold now on a 30-minute time frame strategy as an example, right? You can actually go and Google and say 30-minute gold strategies. And if there is such a video out there, if there is, you can watch it and see what are they sharing about gold in the time frame that you are backtesting. What are the little things there? Because you have us, but then you have guys that you don't know, but they are available. And that's the data configuration, that data accumulation that's happening, the building up thing that you were mentioning all the time. So we're building up the confidence with backtesting by looking at mentor that you have directly and guys that you don't have that is more indirect, but it's all adding and flowing into. So that supportive environment becomes very important as well for backtesting, because no man is an island on his own. You need, you know, they normally say that to a man that is married, but it's not always the truth. It depends how you see it.
Okay.
That if you want to build a nation, it's not going to take a man and a woman. It's going to take people.
Yeah.
So to build your strategy for maximization or from an optimal perspective to be functioning well, you need other people's perspectives.
I fully agree. That support needs to be
there. That support needs to be
there. I remember there was back in the year, like I think 2-3 years back or 4 years back, there's a successful businessman in South Africa, and I listened to one of his interviews, and then he said, he can take any business and turn it profitable. Why? Because he knows how to build a business. He knows it. So if you know how to build anything, you can take anything and turn it into something.
Yeah.
Big, right. It goes to that while you're busy in the process of backtesting, you need that support.
You need the support.
That support would add in more to the data you're trying to get.
Agreed.
Right. And also the support also can benefit you while you what you call forward testing. You are able to see while you're getting the data from historical data, price action, you are able to try and apply it with the support that you get moving forward.
Got you.
Like, let's say we're in a session, we're looking at gold. You've seen for the past 5 years, gold has been creating a particular pattern. Now, in the session with the mentor, with the support, you are able to see how that support implements the strategy, the approach moving forward. And then you are able to now start recognizing that these things in future, they do also form in the market as well.
Yeah.
I fully agree with the support part.
You actually reminding me of a story of mine. Now for me, what's critical is that even though I can trade on any time frame,
sure,
there is guys that understand, example, a scalping time frame in a way that maybe I've not seen it.
Yeah.
So I can be profitable on it. But maybe there's someone that studied the 1 minute or the 2 minute or 3 minute chart so intensely, whereby their entries are so accurate because they've focused on that specific time frame. So what I've always done, right? If I see that someone knows something that I have an idea about, but there's something there that they've seen that I haven't seen, I will buy into it.
Sure.
And I will pay money for that. I'll pay the 3,000 Rand. That's just me. Because I believe that once I've paid that money, I will see what I haven't seen. Even though I'm making money, I want to become better. I want to sharpen myself. Because remember, we are teaching people. So our perspectives, my perspective must always be expanded. I must always grow so that any individual from any walk of life that maybe needed more accuracy in a 1 minute time frame, I would have actually paid and gotten something so I can give them much more quality. Because remember, there are guys out there that teach a strategy, but they don't know how to communicate. Like they're extremely profitable.
That's true.
But if they must take a class or fifth, they cannot speak. They can't relay it. They can't convey it. They can't break it down. But they can just tell you, here's the steps, make money. You see, now for us, we are educators. We break it down to the bone. We strip it. So to know what this person is saying and being able to relay that in detail, that's a powerful thing, man.
It's a powerful thing. And having those two things where you are able to trade and able to break it down.
Yes.
There's power in that.
There's power in that, brother.
Power in that. All right. So the data, getting the confidence, I believe that's how one gets the confidence to move forward. If you have the statistics behind whatever you want to do. And like an example with this, let's say, like, you're not a football fan, right? I think you. But you don't.
Yeah. Let me actually set the record straight. The last time I watched Manchester United was with David Beckham, Eric Cantona, Roy Keane, Andy Cole, Dwight York.
Wait.
Sheringham. Yeah. Those.
Cantona.
Yeah, those.
I know those people.
That was the fantastic team.
Legends.
Those are legends. There's the last time I actually dug into soccer. And can you see how I can recall the names? Is because I was really into soccer at that time. And somewhere I got.
And that's when Man United was up there.
They were up there.
Right now, it's tough.
Guys, for all the Man United fans, I can't say anything, but just now I was with you.
I'm one of them.
Back then. Are you man?
I'm one of them.
Oh my word. Sorry, brother. You see, I
no,
don't.
It's okay. It's okay. It's
So now at the bottom,
it's rough. It's tough now. It's tough. I don't understand why.
I did hear, in the grapevine that Manchester City is doing much better than Manchester United, or what?
City is, like 20 times better.
Okay, so now, just to give you another angle, when Man was great at that time, Manchester City wasn't.
No, it wasn't. We didn't know Manchester City.
Exactly. At that time, with Beckham and all those guys, you never heard of Manchester. So it just shows how things flip. How things flip over time. So you might not be profitable today.
Yeah.
But give yourself some time.
There we go.
In the future.
There we go. Someone might be a Manchester City now.
Now, why? Hey, do you see where this thing is going?
Where's the pop? Where's the pop?
There might be Manchester City now.
Right now, and
funny, man.
Just give yourself patience, trust and believe in your abilities.
Absolutely.
And your skills.
Brother, when I laugh and there's tears in my eyes, that's a good chuckle, eh? So it's data.
Yeah.
It's back testing the data.
The data.
It's also looking at the data that historical, but then you mentioned moving forward with it to see how it could. It is a supportive environment that's needed, close people in proximity, and guys that you get online. So all of these things I'm mentioning is what we're now concluding that are assisting. There's obviously more. I mean, there's
more,
tens and hundreds of things that you can. But just from a critical perspective, a supportive environment, proper data, bringing them together with consistency. We are saying that builds confidence.
Yeah. But now there's something else. You see, now when we're getting the data, someone who's watching right now might be asking or thinking to themselves, how long should the data be? Should it be 1 year's worth of data, 2 years worth of data? There isn't an exact answer for that.
Yes.
But what's important is sufficient data. To someone else, sufficient could be 6 years.
Yes.
Someone else could be 3 years.
Yeah.
Right. Sufficient data that will build that confidence in a strategy.
Yeah.
That's it.
So, okay. So if we chat about the sufficiency of that specific data, you said one person for 6 years, that might be enough for them versus 6 months. So then it's safe to say, as long as whether it's 6 months or 6 years, if that pattern or the way the price action performs, whether it's 6 or 6 years, if you keep seeing it being repeated and duplicated, whether it was 6 years or 6 months, it still works.
100%.
It doesn't really matter whether it's 6 years, 6 months, 10 years, as long as you get the duplication of how the price moved at those key levels.
That's what the strategy is.
Yes. Okay.
Basically.
With you.
As the market moves up and down, it creates the market can move randomly.
Yes.
Right. But there's a time there and there where it creates a strategy. Boom, print a strategy. We need to be in a position where we are aware enough.
Got you.
And that's where the backtesting can teach us now.
Yes.
Right? That awareness to be able to spot, okay, there's an opportunity.
Yes.
And this opportunity is not just any opportunity, it's something that I've been getting data.
Yeah.
100%.
I saw a guy that is trying to cut into a niche market by saying how to catch a falling knife.
Hey, now, okay.
I
can already see.
This as a deal also. How to catch a falling knife, because he feels everybody's chatting about strategies that had to do with the support and resistance levels, which is true. Everybody has a specific strategy around how to trade those levels.
Sure.
But he wants to come and show people how to trade when the price is just falling. You see, now that is very interesting.
It is interesting
because it's very risky at the same time. So the risk is high. So he says how to catch a falling knife.
At the same time with that, I was watching this other podcast, listened to this other guy, and then he mentioned the same thing but in a different way. Said what he does is that when everyone is buying, he is selling. When everyone is selling, he is buying. Because now, let's say, I'm selling like anything, like coffee. I'm selling coffee. It's winter now, I'm selling coffee. Now, when the price of coffee drops, what does it create? It creates a discount for you to buy.
Yes.
And then come a time where you buy the coffee and then everyone is selling it, looking for a buyer. When he buys the coffee, seasons changes. And there's gonna come a season where coffee is in demand and you already bought it.
You already bought it.
Now he has to sell it to the people that want to buy coffee. Do you think it's gonna sell it to those people at the price he bought? No, it's not gonna sell it. It's gonna give them a
higher price.
Higher price.
Yeah.
So it goes back to what you're saying, that it is interesting how they view it. When everyone is selling, he's looking to buy.
Exactly.
When everyone is looking to sell.
Yeah.
Yeah.
So maybe maybe if I can just show the guys, maybe just a setup, like that we're working on.
So you're shooting to the chart now.
We're gonna shoot to the charts, guys. Just a quick setup here. AUD NZD.
100%. Go for it.
Now, what's critical here? You can see that I have a outer trend and an inner trend here. I'm using the equidistant channel, but I'm not using the equidistant channel as you normally would use it to outline the actual channel, which would be a line there. So I'm using the equidistant channel on the other side of the uptrend to show where the exhaustion of the buyers are. And so that gives me a more streamlined entry, all right? A more streamlined understanding of where the lows are and the lower lows are being created. So when price pushes inside of the first one, the inner trend there, it creates the first low. Now, how do you engage that? By looking at, you see that area, that support there?
Yeah.
That's the low. So price must come and violate all the other areas, or at least the ones before it, to create the first low. Once we push outside of the outer trend, it gives me a lower low. So that's already allowing me to understand that this push to the upside, that thrust, that impulse, as we like to call it, all right, or that move to the upside, there is a retest or there is a pullback that is now in motion. Now, why I do this? Because I want to connect it to the confidence. This allows me and builds up my confidence in the pullback, which allows me to get into a more, I'll call it a more sensible entry, where I'm not doubting myself as I would normally, because most guys, they would have, as an example, they would have entered right there, or guys would have entered over there. If I only use the one trend line, they would have entered there, put their stop loss on top there. But then look what happens. Stop loss gets hit and then it comes back down. So the direction wasn't wrong. They just got in prematurely. So instead of going in there, I rather wait for a low to come out and into, to come into, well, to break that previous break there inside of the buffer zone. Because this is a buffer zone. As long as price is inside there, it's not going nowhere. It's just creating higher lows. Do you see that? So there's a low, there's a lower low. Now that we're out of it, now that we're outside, the probability is now higher.
There we go.
And that gives me more confidence because the probability is higher.
There we go.
So as a setup, I just wanted to show the guys there. Guys, we wanted to show you from the academy perspective that a setup like this, we only use support and resistance and two trend lines. That's it. There was no indicators there. We didn't use any chart patterns. We used no candlestick patterns. We just used two tools. Now imagine we're using chart patterns there added. We're using indicators that's also added. Imagine the confidence now in this setup.
And the confluence would get.
The confluence.
Confluence would get.
You'd get it. And that shoots up the confidence and the probability where you can come and say, okay, finished and klar. I'm closing my laptop. I'm going to eat lunch.
Done. Just take a trade. Even if you throw away your laptop, it's fine.
It's fine. You just log onto your phone, you know. That's just a quick one there for the guys.
100%. That's a good one. And I'm glad we are talking about being able to detach yourself from the chart when you execute a trade. A lot of people struggle with that.
Hey, brother, you do the every time.
Every time, 5 minutes, they just look at the phone every 5 minutes.
Yeah.
And that's where now confidence is very important. And having the trust and the belief in your approach to the market, your analysis, your strategy, and all of it. Of course, when you build a strategy, there's things such as risk management that comes into that. We'll talk about that maybe some other time. But this being able to detach yourself away from the chart, that's when you know you are really confident.
You're confident in what you're doing.
look, even if you lose that trade, it's fine. But because you've got confidence.
Yes.
Because if you lose the trade, you are able to go back and check, how did I lose this trade? What happened? And try and fix there and there. But if you're confident with your strategy, then look, then opportunity is just around the corner.
Okay.
The next trade just around the corner. That's it.
Got you.
That's it. That's it. Yeah.
Yeah. So, I mean, maybe just a few things here that I got on this list here. Maybe just to help the guys build a bit of confidence.
Items.
Yeah. Look, I want to maybe 3 or 4. Hey, brother, at the academy, you and I, we want to be, we
go all in.
We go all in with this thing. We don't mess around. Yeah. So maybe 2 or 3, maybe just to build confidence, guys. Always look for positive feedback. I mentioned supportive environment already. Overcoming challenges. I think T mentioned that now, exactly that. If you see there was a trade you lost, go back into it, see why you lost it, because that obviously helps you overcome it. Personal beliefs. I think that's where we touched on in the beginning, the trust, the having faith in like your personal beliefs in yourself, where you come from. Stay rooted in that because it gets expressed in what you do.
100%.
Sure. And maybe just the last one, have proper role models. I think that is one that people don't chat about a lot anymore, because everybody wants to be a role model, but they're afraid to say, I admire this individual for what they've done, because they want to be the ones to do it.
I get you. Yeah.
And that's what society has turned into in certain areas. I can't say it's everywhere, because we've been to Botswana now, Namibia. You saw there's guys there that are willing to say, we want to learn. But in other parts of the world, it might be, hey man, it's fine. We're doing our thing. You do your thing. And that's 100%. It's just the way it is.
Yeah.
So being able to say, I've learned from you. I've learned this from you. And engaging with that individual more builds more confidence in you. And then maybe just last one, setting realistic goals.
You see that one? That one needs an episode on its own, man.
Setting realistic goals.
Episode on its own. We're going to talk about those points.
Yes.
We're going to talk about those points.
Setting realistic goals, brother. Hey, but I'm with you. Lead it, my brother. Because we'll soon go deeper.
I think let's end it here.
No, got you.
Coming again with another episode. So it was very interesting. We spoke about lack of confidence that one can have in their trading style, trading approach.
Yeah.
And we'll see the guys on another episode.
We'll see you guys on another episode. Some in the classes, some on the NFP Live, CPI Live.
100%.
Did I say CPI now? What did I say?
Yeah, CPI.
I thought I said CIP. Maybe we'll check it. CPI, guys.
CPI, 100%. So remember, don't forget to share, like, subscribe. If you guys want to get in touch with us, the details will be down below. All right, on the description. They say description.
Is the description? Is it lower third? No, lower third.
No, lower third is something different.
Hey, guys, animation. Forgive us. We traders, guys.
Yeah, sure. We'll catch you guys on the next episode. Yeah, that's it. TD Markets Academy, episode 5.
Episode 5.
5, season 3. Myself, Tsepo.
Ashley Reeve, guys. Thanks for tuning in.
Catch you guys. Cheers.